Agrawal, extremely bullish on earnings growth over the next 12 months and sees earnings impact from Q3 and Q4 may be strong for banks, and he's also quite bullish on this sector.
Rate sensitive sectors like housing, it will go to the automotive, it will go to the large ticket items, so capital goods. So all those things will happen. You'll see those companies doing very well. So I think impact should be visible in the corporate earnings by Q3 itself should be better than what analysts are expecting.
Yeah.
And Q4 will be full blast, kind of a recovery. And I hope there is going to be further rate cut. In fact, I was talking to a few banks on one-on-one basis. They are saying that they are looking at a bumper Q4. Bumper, that's the word he used, bumper Q4. I would be bullish on the earnings growth for next 12 months. Market, what they will do, whether they're correct or, whether the P multiples will go up or stay here or go down, I don't know. But earnings should pick up in next 12 months. I would think that PSU banks are cheaper to buy, and they have cleaned up their act, because whatever happened between 2008 to 2020, it got completely cleaned up in 2020. There is no directed lending from Delhi. So now these banks are really professionally managed. Technologically also they are more or less up to the mark, particularly the few of the larger banks. So I would think that why should there be so much of, in fact there is no leadership crisis in public sector banks, because
Yes.
if somebody is appointed for 3 to 4 years, everybody knows that the system works with the 4 years of CEO leadership. In private sector, the banks are led by 15, 20 years of very charismatic leader, and when he goes, there is a problem. So I would think that large public sector banks like SBI and all, particularly SBI, looks very, very attractive.
And this is going to drive, you said, rate sensitive sectors going in the next year or two as credit growth, led by credit growth, which is coming.
So there is a domino effect, there is a multiplier effect. You buy house, then housing leads to purchase of plumbing items, then furnishing items. So all kinds of labor and all, and what the labor spends on. So I don't know how it works in the economy, and nobody can figure out. But it will start with the rate sensitive, and then it will flow to the other consumption items. So overall, there should be a pickup as we go forward, quarter on quarter. Buy the ETF, capital market ETF. There are 1 or 2 ETFs, buy them, because you don't know which way see, the real issue is that, of course, wealth managers, asset managers, they'll be the best place than exchanges. Exchanges at the top, wealth managers, then asset manager, then wealth manager, then broking and the market intermediaries and all. So all of them will make money. The issue is that what the regulator does, because regulator here is very active, proactive. They're not going to leave it as it is. See, you might have seen recently we just got whacked for kind of charges.
Yes.
And so I think regulator in their own wisdom, they'll keep bringing on the what do you call
the cost of
what
transaction.
it costs to manage money,
Yeah.
and how much one can charge to the investors. So that if they are too severe, in that case profitability will limit it. But I think, and that's why this, but in some places there is no regulatory role. There is no regulatory, in wealth management there is no regulatory role how much you can charge. You can charge 10 basis points, you can charge 50 basis points, you can charge nothing. So there are a whole lot of things in that. So my sense is finally wealth management will do much better than even asset management. But asset management is an amazing machine, One manager can manage, one guy can manage 1 lakh crore.
Yeah.
And with no capital adequacy requirement. So I think it's a wonderful time. And all of them, they look a little pricey at 35, 40, 50 P. But the possibility which is there for the next 15, 20 years of
Mr. Trump, actions have impacted one sector for sure, which is IT. In the last 1 year,
Why it is impacted?
in this
There's nothing on services.
outflows, foreign outflows have happened nearly $20 billion from IT alone. In that sense,
No, but that is because you are expensive. Your earnings growth is 5%, 10%, and your P multiples are 25, 30. So obviously the people will sell.
so it's a valuation correction, which is or P
Stock market is only about valuation. I don't care a damn about who is saying what. If you tell me the company which has got 35% earnings growth in IT, has it fallen? No.
No.
They've done well. So what happened to them? The same FIs have come and bought there.
So do you see IT making a comeback soon?
I think so. It may take some time for the business model to be rediscovered, reconfigured under the new AI kind of framework. But I'm sure the world cannot do without Indian IT. Like world cannot do without Chinese manufacturing. World cannot do without Indian software services. Now, how, in what way the business model get reconfigured, what will be the role of the each and every what you call software professional. My sense is finally, even under AI, people need more people because the demand will be too complex, and I think people look for solutions rather than looking at give me one code, this and that. But whatever AI solutions, so there'll be software, there'll be data what do you call data centers, there'll be whole lot of things, cloud and all kinds of things are there. So the opportunity will be for a large company like TCS and Infosys and all to give a complete solution of AI based whatever is the requirement. They should be giving that solution. So I think there will be reconfiguration of the demand pattern, but they will come back.